5, 4, 3, 2, 1.
Hi all, and welcome back to the Startup Lowdown. This is, of course, the show where we wrap up the week in European VC, and it's been an interesting week. So let's start right off the bat by saying that we were at Tech Barbecue this week, and it was amazing. But I had a feeling, and Hampus from Pale Blue Dot put this well when we had a talk with him, and he said, well, a bunch of VCs here, and none of us are really engaging with any of the great content that someone has spent a whole year to put together. So I wanted to ask Dan and David, is there something we could do about that? Could we make these events so that they're actually other things than just networking for VCs? Should we have, a scene dedicated to super nerdy stuff like portfolio management and that kind of thing? What do you think? Tell me. Yes.
Morning, gents. So I am not convinced that in any format jiggle at any of these startup conferences would make VCs behave any differently. There is something about being the money and this kind of illusion of entitlement that us, and I'm putting myself firmly in this bracket, we live in, where we will go off and do our thing and be all on our own, and founders and others will go off and do their thing. There is a semi-element of, if you have anything with investor written on your badge, that you get pounced on every 10 seconds. So I understand the kind of the desire for a lot of investors and VCs at these events to kind of not be front and center. But Slush do this well. So the startup event Slush, all of the badges look the same, everyone is treated the same, and they've got these lovely little implicit ways of not enabling or allowing VCs to sod off and sit in the corner. So I think it's more about how and where you will enable. Like, there's no investor lounge, for example. You can't just go off and hide in the investor lounge where no one else is allowed. So I don't think a format change will change VC behavior. I think it's just these little touches that create inclusion. And to start with, all tech conferences, if there's anyone watching from a tech conference, they should remove investors from badge, I think.
An interesting perspective. Like David, give me your...
I think I'm less skeptic than Dan, but then again, I'm less experienced, so maybe that's why. But I think it's more about, I think there's two questions there. One is how is there a better way to ensure VCs do the networking? Because we all know that networking is just not out of fun, right? It has humongous value for us in venture. Even ourselves, Andres and I, we organize some breakfasts and dinners. We were of course networking, we're of course having fun, but we're also kind of working on our deals, working on fundraising, working on a bunch of super exciting stuff for us. Same as every single other VC that was networking around, right? And then I do think there might be something in terms of if we can create some kind of content that is of extreme value for VCs, and maybe more, it will always be more for emerging GPs, then maybe there's something there that we can have. But I think we need to think about that, and even think if we want to play a role in that, because that could be a cool test for us to run.
So I just wanted to pull up this one, and that is because what we are doing at these events is, of course, that we're putting together dinners, and we try and really get everyone to join us in LP syndicates, whether it's ours or others. We just want to get more people involved around the great VC funds that we have in Europe. So if any of you are going to How to Web, we're going to do that again. Ping us, we'll shoot out an application form so we can put together the greatest dinner ever. That would be amazing to have you with us. I'll shift to this one now and ask David to comment. It's VCs cashing out in the summer. We've got some great funds that have made some great exits. David, please do comment on this.
Yeah, I'm kind of sad that you didn't use the title I wrote for this one, which was a VC's French Summer Romance, call them DPI. But it's a cool little article, a cool little analysis by Sifted on data from Deal Room, a bunch of M&A deals for companies launched after 2010. It's focused in European tech. And what we see here is French investors are rocking it. They have most exits from June to August. And we have BPI Friends and the Elia Partners owning it with 5 and 3 exits respectively. And then we have honorable mentions to Global Founders Capital, Pre-Seed Ventures, and Force Over Mass Capital, each with 2 exits. And I love that most of these names are somewhat friends of EUVC. So super cool to see that. Props to them. Congrats. And then in a nutshell, other highlights from the article, hottest sectors in terms of enterprise exits and enterprise software, fintechs, and marketing startups. No big news there, I'd say. Geos, UK, Germany, and France. Again, we know that there's a lot to be said about the geos of the startups as they grow. But again, I would say no real surprise.
Now, I'll go to the next one, which is technology startups must look beyond scale. And it tells us that we're now in a world where we might be primed for real innovation, not just what some people might provokingly refer to as 5 minute groceries and that kind of thing. I think that it does look like we're having many more startups coming up, building in and emerging managers coming up and building in the deep tech space, especially climate. Again, I want to think back to our conversation with Hampus from Pale Blue Dot when we talked about, do we actually have too many climate emerging managers coming out? I've seen also Michael Jackson commenting very, I'd say provocatively, to the point that we have too many emerging managers and too many VCs kind of rebranding to do climate. I'd love to ask you, David, do you think that we have a problem there, or how do you see this space?
It's a good question. I think, something that I've listened these last days and that I kind of agree is the solution to climate is kind of, I think kind of everyone agrees in venture that the solution for it is deep tech. So that's just an interesting side comment. And Hampus put it quite interestingly that there's different types of problems within climate. And where I see an issue, and I think we've seen it a lot in Europe and now much less, is the VC fund, the VC model is good for a specific set of problems and maybe not the best for another set of problems. And I see every now and then emerging managers, in my opinion, tackling the set of problems that, project financing or, private equity models make much more sense than the venture model. But yet again, hard to have a strong opinion there, Andreas, to be honest.
Yeah. Dan, you're back with us now. Give me your commentary on this article. We just spoke about whether it seems like we might be having a few too many emerging managers and VCs rebranding to do climate and deep tech, where they might not really have the depth of experience to do so. That is some who provide that as a harsh critique. I'd love to hear your perspective, both on that and the article in general.
There is something around. I mean, I realized that when I was writing all my notes for today that I have a very selfish theme. There's this very selfish theme of impact and how to make the world a better place for my kids. And I'm basically just playing out my own neuroses when I was writing some of my commentary, which I think leans into what you're discussing. So can VCs who have no depth of experience rebrand and go deep into anything, whatever it might be? No, but if it's doing something that's good, then why not? Why not give it a try? Why not get amongst it? You got to start somewhere. I mean, I don't know, Richard Branson woke up one morning and went, fuck it, I'm going to start an airline, right? On the back of a napkin in a bar with his buddy, probably. Then went and bought a plane out of a desert in Arizona and then started Virgin Atlantic. So is there any difference between that and a VC going, do you know what? I want to make the world a better place. If this is the intent, genuinely so, and then making the world a better place by focusing on climate tech, kind of, so what? Kind of go for it. Kind of, why not? So if it is greenwashing, if it is veneer, because there are a number of VCs who are doing impact things when you only have to scratch a little bit beneath the surface and there's not that much impact and they're investing in the same kind of shit everyone else is. Is that fair and right and reasonable? No. But is having the conversation going the right thing to do? Yes. Does it need real action that's going to have real impact on the other side? Yes.
But let's go to the next point. This is Kjartan Rist's article, and he says VCs were seen as a bit weird. 20 years in European VCs. Kjartan is looking back. David, give us your commentary on this.
No, I was just saying that our good friend Kjartan, he's been on the pod a couple of times. We love him, super cool team at Concentric, and he wrote this cool article. It's interesting because Kjartan's been around for quite some time. It's always interesting to, at least for me, as a youngster in the industry, to read about more experienced people. I think basically the whole setup of the article is, we're going into a different state of how the industry is now, and it's good to look back. And Kjartan starts off by saying something that we take for granted right now, which is, 20 years ago, nobody would really believe that European VCs would have been instrumental in backing some of the biggest tech companies in the world. And here we are today. And that's not a question. And it's kind of something that we don't really think that much about anymore, but I think it's always good to put things into perspective. And then I'm just going to quickly highlight some of the core messages. And I invite everyone to read it. First, he talks about going from tech desert to tech hub. So European VC kind of being nothing, and now we have these strong hubs, and a lot of stuff is happening. A lot of investments are taking place. We went from weirdos to trendsetters. I think we can all feel that. Everyone wants to be a GP these days. It was like that some time ago. He talked about the flywheel effect from early successes. That goes without explaining, I think. And then he talked about two final topics that I'd love to ask my co-hosts to comment, which is we've seen VCs going from vulture capitalists to value add in Europe, and also that European LPs need to catch up in the sense that there's a lack of institutional support. Dan, I'd love to hear your thoughts around these two. So vulture capitalists to value add. We've spoken a lot about value add, and then the European LP landscape in Europe. How do you see it?
Well, let's look at the top 20, I think, SaaS businesses. There's only, I think, 2 from Europe, if my brain recalls correctly. So we've got a long way to catch up with the Americans with regards to output and success and all of the things that all of the people look at in the charts. Europe has a long way to go. I wasn't around in venture 20 years ago. I've only been on this side of the desk for the last 4-ish years. I don't know. Vulture to value add, is that fair? I'm sure he's expanding and elaborating to make a point. I think you could argue that VC is still fairly vulture-ish, and I know that we're going to talk a bit more about this later. That's not a European phenomenon by any stretch. That's a global phenomenon. I love the fact. I mean, I hate the phrase value add, but as a firm, we pride ourselves on the fact that there is a wealth of experience that can add value if required. And I'd like to think that the people that we work with see the value in what we do, and invariably that's marginal gains, which is a 10 p.m. Sunday WhatsApp message thinking about a contract or a hire or a challenge or something. So I think so I like the fact that there are more European VCs with a background and a history of actually running a business rather than pure financial investment. I think that's absolutely an imperative. How can you invest in early stage startups if you don't know how an early stage startup runs?
Yeah, and I think there's another it would probably be quite easy to track, saying what were the standard term sheets earlier versus today. As an example, we didn't have safes 10 years ago, 15 years ago in the European ecosystem at all. And that's, of course, something that has made it much easier for VCs to put money into very early stage companies, but it's also something that has allowed founders to get a better deal at that stage. So I think that's a very clear expression of how on the term sheet level we have seen important developments. And when I also look at when I got started in this 6 or 7 years ago, I'd say it was much more typical to meet VCs that came out of a pure finance and consulting background rather than the operators. And typically operators are the ones that are leading the charge when it comes to being founder friendly because they've been there before. And they don't bring the consulting playbook and think that you can plan your way out of everything. And that's typically where things go awry, right? When you say, yeah, but we had a plan, we agreed on this last time, and then why are you not executing? And if you don't have the understanding of that, then you end up in bad situations. And that's maybe not because you're a bad person, it's just because you don't know what VC is actually about.
Yeah.
Next topic, we've got two, as you very well put, Dan. We've got two startups or two companies building electric vehicles, both named after the same guy. That's a bit weird, but there's more substance to the comment on this article. Dan, let me know what you think.
Yeah, it came from last week. We were talking about where the responsibility lies in the C-suite for. Last week it was risk and being hacked and who's liable to be prosecuted for what. This is a lot more clean cut. I mean, if you look at what Trevor Milton's done, allegedly, just to be clear, he's gone off and bought houses and yachts and is now being prosecuted for fraud. And I think most people will remember the story of the Nikola truck going down the hill. Oh my God, this new electric HGV, as we call them in the UK, are the semis, as they call them in the States. And it's basically rolling down a hill. And it was all bullshit. So I think there's a thin line between fake it till you make it. As a founding team, we all tell stories. We all want to, like the Theranos story. Could Elizabeth Holmes ever have been able to do what she said she could do with a droplet of blood? And could Trevor Milton ever have done what he said? I mean, and when did they jump the shark from, fake it till you make it to believing their own hype and I've raised millions and I'm a genius and it just works and then they convince themselves. And I guess we'll never know. We'll never know if they have, or do they still believe the narrative? Who knows? Who really knows?
Next topic here is, again, Dan, you commenting on the beautiful Starbucks launching their metaverse.
Right. So backstory. I believe that all startups should use their own product. So the kind of the backstory to this, and I'll come on to what Starbucks have done in a second, is keep using your own products, keep getting in the customer's shoes, because there are so many products that we use on a daily basis where it's just shit for all of the wrong reasons and stuff that could be easily fixed. And Starbucks is a classic. Their core app does not work. It takes 12 clicks to order a bloody coffee in your local Starbucks. It's a really bad user experience, but they're not focusing on that. They've gone and built the Starbucks Odyssey, which is you earn, they don't call them NFTs, they call them something like coffee vouchers or something. And it's their new loyalty program based around, I forgot which blockchain network it's on, but it's effectively you earn your loyalty credits as NFTs, and you can then earn or sell or get rewarded on and off with on and offline experiences. But what a crock, what a marketing Web3 crock. And obviously I'm doing them even more favors by talking about it. But so the key message here is, if you're, from my perspective, if you're a founder, just keep using your own product and focus on your core thing and do what you do well rather than nonsense.
I find it super interesting how all these big corporates are getting excited about NFTs, and all of them are kind of launching the NFT. We spoke about Starbucks here, but we there's so many we can speak of that. Like, it's ridiculous, and the value it creates is probably close to zero, or maybe negative even.
And here's another part of the crypto space that I would love Dan to comment on. Dan, tell me a bit about your views on both A16Z crypto, but also the companies that we're looking at here.
When I started in venture, coming from the operator side and being a founder for many years, and then crossing to the other side of the desk, the first thing that you do when you enter the world of VC is look at all of the tier one VCs, understand the market, and you start to get these hero complexes over certain companies. And Andreessen was one of them. It was like, been around for years and invested in the greats, Silicon Valley, tier one, and then perhaps there's only one way to fall from there as you learn your own craft and as you come through the ranks as a VC. But I just don't think they're covering themselves in glory. I think, and I follow the Dixons, the Andreessens, the Simpsons, and I'm trying to just stay in touch and just keep an open mind. But if you look at Axie Infinity, Helium, I forgot the name of the other one they did, which was the anti WeWork flow, the non-co-working stuff. And you look, especially at the crypto stuff, it's just bullshit. It's not moving the needle. It's not making the world a better place. It's just sticking it to the man. It's just trying to, poke the institutions. It feels like for its own reason, almost just because. And I can't see any other win apart from the PR and the fee structure. I don't see Axie Infinity is taking advantage of people who think they can genuinely earn money through gaming by playing the games. Have a look at the Axie Infinity story. Have a look at the Helium story, which is a physical device that it's like a Wi-Fi device on a new range, not 5G, not Wi-Fi. I think they call it long-fi. And it's about you using these, trying to build a network, effectively trying to build a new kind of network, but it's not. It cannot work from the offset. And you wouldn't have to dig that hard to work out where the reality is in the business model. And I'm all for moving fast, breaking things, trying new things, trying these new technologies. But if it looks from the outset that it's just a Ponzi, or it's just bullshit, or it's not going to make the world a better place, and it's not going to have any impact, just don't do it. And I think Andreessen in particular, I'm not shining the light in the right way, and I find it quite offensive.
I just love the fact that they in these times choose to back a company called Helium, whose logo is a fucking balloon. That is sticking it to the man. Let's go to someone else who's choosing to do something quite different with his money. Patagonia founder is doing something to fight climate change. Dan, give us your commentary.
I just wanted to put this in. I know this isn't startup. It's not really investor, and it's not really venture. But I just
Patagonia. It's Patagonia. Couldn't be more relevant with our VC audience.
You're right. I don't have the vest, but now I will go and buy the vest. Even though this chap has told me not to buy the vest, I'm still going to go and buy the vest. But it's just an amazing thing, and I refuse to be a cynic about it. I'm a miserable, cynical old man mostly, and I refuse to be a cynic about this one. He's put the company and profits beyond what they reinvest in the company all into trust to fight climate change, and I just think it's a magical thing, and I hope we see more of it.
Couldn't agree more. Google loses EU appeal and is fined a record $4 billion. This is from Axios. Everyone is commenting on it, and as such, I'll ask you to kick us off, Dan.
Yeah, so I think the kind of the startup thinking, the founder startup in me thinking was, at what point does my business become evil? At what point does the machine become the machine? So this was kind of my thinking. I was thinking Google have basically lost their appeal, their $4 billion appeal. I think there's 3 in court at the moment. And this one was from a few years ago. So this was the antitrust, anti-securities appeal, which they've just lost, I think, for the first time. Basically, they're using their clout and their might to stop competition within the Android ecosystem. And you go, well, that's fine. Is that just hyper efficiency? Is that just a corporate being really efficient and being very protective, being very smart? Or at what point does it just become evil? I know they've changed their what was their vision statement? So don't be evil. I know that's evil, but it's like, no, at what point in startup land, as a founder, does the machine take over? And I wonder, we have all these high expectations of these companies to not be dicks. And I'm wondering where that line in the sand was. That was just an exploratory thing that was going on in my head that I wanted to share.
No, but so if I should give my perspective, it is that I think it's very, very good that we've had antitrust all along, and just because it's now hitting the tech companies that VC has joined in backing, it's no reason for us to start being, we don't want antitrust laws. Of course we do. And of course, everything that Google has been doing and Facebook and Apple are doing in terms of skewing any type of competition it's not right. We shouldn't, just because it's the behemoths that VC has helped back, we should not think that it's a good idea. That's my perspective. Now let's get to Brad Feld. He has done a nice show with Techstars, and one of the comments, David, you said, I think we should talk about this for a bit.
Yeah, I don't think we'll have the time, but let me let me throw it in there either way. It's about the dreadful down round, and I was reading some of his stuff. So Brad Feld, is quite active on Twitter and LinkedIn, and he had this kind of article for GPs or something like that. And one of the topics that he talked about was don't fear down rounds, meaning where capital is raised at a lower valuation. And he went on a little rant for why, not understanding why this has become a fearful thing. And he did this kind of analogy with the public markets, where this is happening all the time, and it's it's just part of the dynamics of the public markets. And he very much disagreed with the view that raising a down round, once you see a down round, that you're dead as a founder or as a VC who invested in that startup. And I just love to ask Dan and Andreas, what's your position on this? What do you think? I found it a weird topic for him to highlight so much, but it did make me think quite a bit.
Did he do any data insight into the success thereafter of like the Klarnas that have lost 70% of their value?
No. It literally was just like a block of text on him explaining his view, which I kind of copy and pasted into our notes. So that's everything we had there.
Well, it's kind of, if that's where you're at and that's your only option, then obviously the optics on a flat or a down round, especially in the early days, are really weak. But once you've gone kind of mega, if you're raising in the billions, if you look at public markets, you look at what I think the Nasdaq 40% of its value.
If I should give my perspective, I'd say that it's if it is true that a startup is perceived as dead once you do a down round, then that is on the VCs being idiots, because we can right now see that the market is crashing. The resets are not because of any change in fundamentals. It's resets because we were paying too much in the last round. And that for that reason, we should now go out to the startup and say that there's something wrong with your model. No, it's the VC model that's been wrong for a year or two, where we were paying far too much because we thought that we could fly all the way to the sky. We could not. And I don't think that it's right to be killing off businesses on the back of our mistakes.
That's very much, and I need to highlight this, that's very much how Brad also ends up his kind of little rant, I'll put it like that, on saying, we need, as an industry, we need to change the way we speak about it, because at the end of the day, if there's a down round, someone gave you money to continue developing and building the business. So it's not necessarily like you did the down round, you're fucked. That makes no sense. And a lot of media likes to talk about that, right? And I think that is the core message that I very much agree with, actually.
Now let's go to startup of the week. Dan, you picked Pitcher for this week. Tell us a bit about Pitcher.
So this kind of came back to my rant at the beginning about wanting to make the world a better place for my kids, and then thinking about what is impact and trying to unpack what creates meaningful change. Now, Pitcher, I've known Frederick for a while, and he's working with Vincent, and they are building a platform that helps more startups get more access to investors, hence in the name. It's a startup that isn't a startup yet, and they're literally embryonic, babies. But I just wanted to highlight them, and I wanted to highlight the whole notion of kind of what is impact, and the idea being my little kind of sense of the impact world that I live in. If these guys and girls can enable more healthy startups to get access to the right investment, then that is going to create more opportunities, more innovation, more jobs. And that's the bedrock. That's the stuff that lives underneath everything, all the reasons why we even bother doing this podcast at all. So, and I think that's real impact. Does it have to succeed? No, it doesn't. It has to just poke the bear and try something new. If it's 5-minute fucking groceries or 10-minute whatever e-scooter deliveries, forget about it. But if it's something that is truly gonna create employment, create innovation, create change in the positive sense, and I think that can be fairly broad, then I think you can put that in the impact bucket. And I think that's really powerful. And I love what these guys are doing with Pitcher.
Awesome. VC of the week, we've got 2 points. One is, of course, North Zone. Everyone has spoken about that, so I won't go too much into that. But all I want to say to that is it's amazing to see that we're having more big-ass growth stage funds in Europe. We've been needing that. And it is a huge influx that I'm really enjoying seeing coming in.
Well, they have a billion, right? They have 1 billion euros. They invest from seed to IPO. So they do everything pretty much. And their check started €1 million, I think. So they're doing and seeing everything. So and that's a great resource for the European founding community to have in Europe. It's wonderful.
Yeah.
It's not a lot of money when you do all those stages, right? When you think of it.
Yeah, but I'm just going to do this. La, 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 la. $1 billion in Europe. Let's go for it.
Yeah.
Absolutely. Next one, and this is the final slide from us today. It's 500 Emerging Europe. It's 500 Istanbul rebranding to what should have been named for years, which is 500 Emerging Europe. They're going and out and saying, well, we had the name 500 Istanbul, but for a long time we've been actually investing in all of Eastern Europe, which I think they're correctly calling Emerging Europe, because that is what we're seeing. Everything is just booming away in Eastern Europe. So I love the phrasing of saying Emerging Europe, and I think it's the right thing for them to do. They're now raising 75 million, so they're also, really taking a step up from being
70.
a 10 million euro fund
70.
in 70 million. They're really taking a step up from being a local player in Istanbul to being a big European player, and I just love seeing that. And I think that's the success story that we end on today. Any comments on this, David or Dan?
Loving it. More, please. Bring it.
Yeah.
There you go. That's it.
Good.
Thank you for
guys.
doing it,
We're all at How to Web next week. So if you want, then come and join us and have a lot of fun with us.